What is up, everybody? Welcome back to the Go Rush Weekly Watch List. Let's see. There's a bunch going on this week. We're in the midst of earnings. Let's take a look at the earnings for this week. Lots of big names. Lots of big names reporting this week. Large names. We had the banks last week as well as CPI and PPI numbers that came out. But I think it's all about earnings this week. So reporting this week, we got Goldman Sachs, Morgan Stanley. We got TSM, we got Alcoa. We have PNC Bank. We have USB. We have CFG, another smaller bank. Ally, another smaller bank. We have, just looking through some of these other names and some other names, just smaller names. With the larger names, the big names that really run the market coming out in the next week and the week after. Apple, Tesla, etc. But a lot of larger and smaller banks this week. I think it's still important to pay attention to what the banks are saying, what the overall sentiment across that side of the market is for this week, simply because they're very closely tied to Jay Powell and to the Fed and to monetary policy. So, I wouldn't say it's make or break, but, when you see the market going in a particular direction this week, you'll know that it is because of some of these banks' earnings reports this week. So that's that for earnings. Let's see what we have on the calendar. We have some Fed speak tomorrow morning. U.S. retail sales along with import price index, industrial production, the beige book. Beige book is a big one. Let's see. That's on Wednesday. On Thursday, we have housing starts and jobless claims. And on Friday, we have existing home sales. So the lesser of the larger macroeconomic numbers, but still can definitely have an effect on the market this week. So some certain things to watch, especially if you're like trading SPX or day trading or you're swinging certain sectors, you want to be aware of what's going on. Especially, I think mostly financial sector is going to be the most volatile for this week. Maybe some energy at play, and then tech usually has that stuff usually has an effect on tech as well. And the effect isn't direct. It's usually like, bank sentiment, consumer sentiment leads to yield, bond yields, 10-year, 2-year, 5-year, which then, as a result of that, tech moves either up or down depending on how the yields are going. So it is all important at the end of the day, is the point of that. All right, so let's take a look at the list tonight. We don't have a lot. I'm going to go through them pretty quickly so that we're not working with a fog tomorrow morning since we're up late. But this first one is SPX. How can I get this? I guess it's fine. So this first one is SPX. SPX, let me just go real quick into the monthly. And, I just wanted to show you the all-time high on SPX, which is 48.1862 on January of 2022, so 2 years ago. Right, so one entire year of kind of a slide and then one entire year of kind of redoing it, and we're back to that level, right? This one opened up at, I can't see that. Let me see if I can switch this. Give me a second. I just switched my chart over to a darker chart. I don't want watermark. All right, that's cool. Anyway, so I got the open here, which was at 47.7814. And if you notice, if you just look across to this month's candle, you can see that price is currently trading above that level, just slightly above it, right? 47.7841 rather, or 47.7814, and we are currently trading at 47.83. So $5 or 5 points above the open of this candlestick here. So it basically, all that to say that we look like we're holding the upper end of this candlestick. You see that price kind of came down and bounced off the 20-day moving average and is working its way back up. So we're primed to make a new all-time high right? The high for this candlestick was 48.02.40. So, shy of the 48.18. But the fact that it bounced off that 20 and it's working its way up is promising. But it really depends on what's going to happen with earnings, right? Because earnings can easily send this way back down. But let's see what happens, right? Ultimate target for SPX, especially if it breaks above that all-time high, would be that 49.23 based on a measured move, a Fibonacci measured move, right? We came back and we kind of retested some of these previous areas, and now if we break through, we can work our way into this level up here, 49.23, and I would say 49.50 above that, right? Looking at the daily, strong move to the upside, big gap, continuation, very, very strong move in this past past month in December. A little bit of chop this month, a little bit of indecision. We did find we almost lost a 20, which was my play for the last week. But then we very, very quickly regained it and retested it 2 days in the same week. And then we kind of formed an inside bar. It did break the range of Thursday's candlestick, but it still hasn't really gone far. So I consider it inside the range still. So I'll be watching for a play above that 47.93.30 break and hold in order for us to buy calls. Otherwise, we can just play break of the small volume point of control here, that green line at 47.80. We could play that down into the 20-day moving average. There's about 40 points to the downside that we can play. I'm not saying it's going to come, in day one, but there's an opportunity for it to slide down back to the 20-day. If it can't hold the volume point of control and break out above 47.93 and hold 47.93. 4,800, last time I checked on GEX, there's a lot of volume there, a lot of indecision there, a lot of, what I mean to say by indecision is a lot of buyers and sellers just kind of sitting there waiting, right? So it depends on who the last order is that gets filled, basically, is going to decide whether we go up or down. So yeah, I'm going to keep monitoring that 4,800. I think that 4,800 is a very interesting level. Last time we saw it again was all-time high. So that's going to be the target for this week if we do break above the upside of that previous pivot here, right? This pivot here. Next one is QQQ. QQQ is already trading. Let's go to the monthly. Already trading above that previous peak. Let me go ahead and set a line there. Right, so that previous peak, we had it at 408.71, and price is currently at 409.56. So we broke out above that all-time high, made a new all-time high in December, and now in January we are working our way into finding a balance around that level, right? So we did break above it 2 weeks ago on this candlestick, formed the doji, bunch of sell pressure, brought it right back down. We held that, that 20-day moving average was what I was looking for last week. But we did break above and hold above that 20-day moving average for QQQ. And so now all we have to do for this week is, in order to continue the move, before big earnings next week for QQQ, is to break above this week's high and then break above the previous pivot's high. And it's skies at this point. There's no levels up there. So I would call it 415 will probably be a tough level to break, as well as 420. And knowing the market and who participates in the market, I bet 420 is going to be equivalent to the 4,800 for SPX. That 420 is going to be a high interest area. It's going to be hard to break. It's going to be easy to get to and then hard to break. So we'll see what happens. But QQQ is looking great. It is maintaining a trend where it's forming higher highs and higher lows. We got the higher high here, first high, higher low, second high, higher low, and now we're looking to make a third high potentially. So let's see what happens. Currently we're still within trend, so let's just see what happens. Where's my list? I see that Blonde Broker posted a quick analysis on Tesla. Tesla 1 hour, falling wedge. Let's look at Tesla real quick. Tesla did not make my list this week, but I do like the analysis, so I'm going to talk about it. Tesla 1 hour, falling wedge, couple of areas to watch, 215.66 and 212.44. I really do think those purple bands are eventually the target. 205 and 194 are the target. So according to Blonde Broker, the Tesla's headed on its way down to 205 and to 195. And it's funny because I have the same levels posted here. Blonde Broker has 205.15 and 193.66. I have 205.69, 194.07. So there's some confluence there. I don't know. Let's see if this falling wedge holds off long enough in order to create that move, right? I'll draw mine like this. I'll draw it like this, right? These usually break to the upside when they do. However, I've seen, especially on like bearish wedges, I've seen wedges fall and never wake up, right? Never get up, or whatever the phrase is. So this can easily fall out of my wedge and continue to slide down, especially on like a 2 or 3 day nasty news. And with earnings coming up in a couple of days, they have earnings on the 24th, so it can go either way. But earnings is an easily catalyst to bring this down or up, right? I have my levels marked at 224.15, 230.61, and then we got some of the moving averages here. And then ultimately, I want to get back. Eventually, a Tesla hopefully gets back to 250-ish or so. But I agree. I think it's going to continue for the downside. I'm not in love with it just because I don't love playing Tesla to the downside, except for when it's very clear, like on days like this where it consolidates, tries to take out the high on that last candle and can't, and then gaps and then breaks. Right? Those are nice days to play Tesla. Days like this are the days that I tend to play Tesla when it gets choppy. So I like to stay away from Tesla unless I have a clear direction. But I do like the analysis on it, so we're going to continue to see what's up with it. All right. The first one on my list is, and these are going to be kind of all over the place, but I'm just going to go through in the way that that I kind of discovered them. AVGO, Broadcom, they are in the business of manufacturing semiconductors. They're along the line of that supply chain. I'm not sure exactly where, but to me, they all kind of behave the same, right? I mean, TSM, what's the other one? Not NVIDIA. NVIDIA is too far ahead. There's other companies that are further in the back of at the beginning of the supply chain. And when you see them performing very well like this, especially after earnings, that's a good sign for everybody within that line in the market, right? Within that sector. So they had good earnings. They had a nice surprise on the earnings per share, a nice revenue beat as well. Strong move up, little pullback, and then now we're seeing a potential continuation. We got this little gap that's being filled right here. And then most importantly, we got the higher lows and higher highs, right? Those are your higher lows, and you can see your highs getting higher here. You have this high, you have that high, this high. So as long as this gap in sentiment here hasn't been filled, so price hasn't come way back down to come back and kind of redo on some of this, right? So that hasn't occurred, and because of that, we have a new higher low, and now we're going to potentially see if we can break above this area here, and work our way into making a new high. Now, this level here is, to me, is very magnetic, especially since AVGO has remounted the 20-day moving average. And I think that it can get there pretty quickly, especially something like one of these 2-3 days where it just kind of puts in a nice gappy candle. So that's my target. 1150 pretty much is the target. If it fails that for whatever reason, then you can just play the potential pivot machine gun to the downside, right? Play those levels, break underneath that bottom level. I think there's strong support here, especially since this coincides with the previous resistance, current support. This area here, if it breaks this area here, then I think that it's going to go straight to that 50-day moving average. And then from there, it can maybe get to 1,000, which is a nice even number to kind of reach for, but we'll see. I like it better to the upside. Personally, I would set my stop right at the very, very tight at the low of day. You don't get the best risk reward with this. What did I just do? Hold on. There. Yeah, you don't get the best risk reward with this off rip. Right at the beginning of it is 2.26. It really depends on where you set your stop. Now, 2.26 is not the best. However, if you bring your stop up to where that 20-day is, you got a 2.91. If you bring your stop up to where that volume gap is, the volume point of control is, you got a 3.69. If you bring your stop up to the close of day, you got 4.43 risk reward ratio, right? And if you bring your stop up to the open, then you got 9.87 risk reward ratio. So, you can start with a 2.26 risk reward and then adjust as you're in the play and the play is working to your advantage. Another way to kind of manipulate your risk reward is to go ahead and set your goal a little further out. You can set it to 3, right? But then what you got to do is you got to adjust your time horizon from one day to out to a few weeks, right? And then at that point, you can really like start to map out. This is how I got the CCJ play. CCJ risk reward for me was really, really nice where it was for our March 15th 50 calls, which we'll discuss in a little bit. But this is exactly how I got it. And I'm like, oh, let me just stretch everything out a little bit. Let's stretch out time, and then we can achieve some of that higher price. And that, lo and behold, thankfully it worked out for us. But same thing. I'm happy with a 2.26, knowing that I can adjust my stop. Right? If I'm profitable, I can just bring my stop up to 0, and then my risk reward becomes infinite at that point. Right? So just keep that in mind with AVGO. That's what I'm looking at for AVGO. Another one within the same sector that I like is SMCI. The reason why I like SMCI now, it looks a little bit different than AVGO. It had a small gap back here that's since been filled. Now we look like we are just about at where the previous support / resistance was over here in this level, and we're consolidating right around that level. Excuse me. And they have earnings coming up in a couple of weeks, right? January 30th. So it's 2 weeks from now. So it looks like it might be in some indecision for that, but otherwise, like, forget about earnings for a second. I love the fact that it's just kind of flagging up here, right? That's a very clear flag. Strong moves to the upside, a little bit of indecision where there was previous indecision in the past. Is that all-time high for SMCI? Let's take a look. Yeah, it is. It is. So we're just about at all-time highs. The high here was 357, and the high here was 357.99. So we did make a new all-time high recently. And whenever you make a new all-time high, usually price will sell off just a little bit. Either sell off a little bit or sell off hard the way it did for SPX. It's selling off just a little bit, but I wouldn't consider it selling off just yet because we're all still within the range of just this area here. Like we're well within a defined area. We're not breaking down. We're not working our way up. So I like this for, and I think we formed an inside bar on Friday, right inside the range of Thursday's candlestick. So as you know, I love inside bars. I love these clearly defined ranges. So break above the high, we can target the previous high, and then from there target the high above that. That's all-time high. If we do break above this level, we're not going to form a small little candle. I think like if we have the decision, we're going to rip to the upside. Or if there's a failure and it breaks down below these volume points of control, these green lines here, below low of day can be the safer start. We have a nice play to the downside where we can target Thursday's low, and then we can come and target Tuesday's low over here. Underneath Tuesday's low, I would target that 20-day moving average. Now, again, I'm not married to bull or bear. However, this is a very clear bull flag with some very, very good upside. Since there's nothing up here, right? There's all open skies pretty much. Whereas down here, you will get a nice move if it breaks down and goes to the 20-day, but you got support here that you got, previous resistance that can flip to support there. Previous resistance that can flip to support here. Some previous resistance here. There's a lot of traffic, I believe, in this area. There's some support over here as well, which is why I think there's a demand move, strength move up. I just like the risk reward better to the upside, but let's not be blind to the fact that there's a potential downside play here for SMCI. Next one is to jump out of the sector. Next one's Amazon. And jump out of that sector just for a second because I'll be right back. Let's see. Let's look at the weekly on Amazon. So, just like the market, Amazon made a new high. Amazon hovered at these levels for a very, very long time. They got their stock split, and then Bezos resigned as CEO, and Andy Jassy got elected as CEO, and then kind of slid ever since then. And now it's kind of equalizing. It's working its way back up. Now, Amazon broke above. It made a new high here for the year, and then broke down on a pivot. Found some support on the 50-day moving average, which is that red line there. And now strong bounce last week to break above all of these highs, right? 3 weeks of high, it made a whole new high. So the target for that is 158.12, which it hasn't quite reached. And then above that, actually, I think I could bring this target up a little. Yeah, the target for that will be 158.65. And then from there, what I really like about Amazon is, let me just zoom in on this. I'm gonna get rid of this watermark too because it's distracting me a little bit. Let's see. What I really love about this Amazon play is we had the high, new high sell off, little indecision, tight candles, very, very, very tight range within these 5 days, right? You have this strong day and then a little bit of indecision within the next 4 days, and then a nice little sell off. Nice little sell off, gap down right into the 50-day moving average. Price bounced off that 50-day and like really bounced and made a whole new high. Took that pivot out, made a whole new high. Now there's a little bit of, it looks like there's some sellers sitting in this area here because of the indecision candle here and then a little bit of selling pressure on Friday. But yet again, we have an inside bar where Friday's price action is within the range of Thursday's price action. So, and then we're also like within some Fibonacci levels. So what I would do here is, you can play fib to fib, pretty much fib to fib, either downside or upside. You can take your first entry at the high of day, take it and play it to that fib. That could be play number one. Maybe you buy 3 contracts and you peel the rest of them, and then you kind of leave one here to potentially work his way up to 160, right? So I'm going to be watching Amazon for this week. I like the risk reward in both directions. However, I think that since it's above all this previous resistance, I think that's going to act as support. I'd go ahead and set my entry at the high of day, set my stop at the low of day, and I will go ahead and set my target at this 162.24. And that'll be on the daily. Now, on the smaller time frames, depending on where your entry is, let's go into the 15-minute on this real quick. 15-minute. Now, let's say price is trading, right? Price is trading, and this is how you do it during the day too. And during the day is obviously way better than pre-market prep. Pre-market prep is just to kind of know what direction things are going in, see some confluence around the market, and see what the sentiment is overall, and then just kind of come up with your plan. Now, you might get punched in the face the next day, right? And you don't have a plan for that, but when you're in the game and you're in it, and price is moving every second and candles are forming, you have to think about your thesis, think about whether it's still intact, think about whether you want to change it, think about what the overall sentiment is, and then act, right? And then what I do is I always say, all right, do we have an established high? And these are some of the better plays, which is why I think SPX, I have better, the word's escaping me. I have a better track record with SPX when I play in the afternoon, or like I let some time pass versus hitting it right in the morning. Because when you let some time pass, you get to establish highs and lows, right? You get to establish ranges, and then okay, you try to break out, didn't do it, came back, made a new low, try to come back to the low, double bottom. Okay, now it's going back up, right? Like you can kind of tell where it's going to go. So, something like this, I would, and let's say like market opened and it came and it kind of opened here, made a new high, came back, retested the low, and now it's working its way back up. I would take my chances. I would take my chances somewhere over here, somewhere there. You see me always getting, and I'm usually in early. The safest would be above the pivot here. I like to get in early because I like to get a little bit more profit if possible, right? And then I usually just set my stop very, very, very tight. If I love the play and I love what I'm seeing, I would loosen this up a little bit. I will loosen it up if I think that the reward, if I think that it's enough to get up here, right? So, and maybe I'll talk about it a little bit tomorrow, depending on how my day is, but during market hours. But usually my days are hectic. But anyway, I like Amazon in both directions. That's the point of all that. NVIDIA. NVIDIA finally has broken out of this kind of choppy range that it's been in for a while. And it kind of formed this little price wedge here, and then ripped as of last week. Absolutely ripped through the wedge. We spoke about it last week on the call, and I mean, it did what we thought it would do, right? It reached some of these levels, found some resistance, some support, especially on this day. And now we're making all new levels. Now, I think NVIDIA here has formed an inside bar. So You got your levels there. I think that it continues to the upside, especially with the strength of all, it built up all the strength during this coiling period. Now it's just kind of ripped. It might come back and retest some of these levels here. Maybe this green line at 530.27. Maybe this Fibonacci level here at 527 ish. Might come back and retest that real quick. But for the most part, I believe that it's going to go up to 600 at some point, right? And we're not far off. I mean, 547 right now. NVIDIA, with 2 or 3 good days, it can really get up to 600, depending on what the rest of the market does. NVIDIA had a presentation at CES on Monday, which was this day. And I guess investors really, really liked what they spoke about. I think that some of this is going to be, some of this indecision here is just them digesting the move. But let's see how this kind of shakes out. I'll be watching this for a break above the high of day, or break below low of day. And then above high of day, obviously we got 560, then we got 575, then we got 590, then we got 600. And again, I like the risk reward much better to the upside. Downside, the only thing I will say is, and even with all this coiling that occurred, all this price action going sideways, the 200 still way down here, right? The 50-day still way down here. Like, we're very separated from the 50-day, especially off this move on Monday. Excuse me. So, it can go either way. It can go either way. Now, if AVGO, Broadcom and SMCI and the rest of that sector, the semiconductor sector, if they end up failing for whatever reason, then NVIDIA might just have a good strength to the downside. Now, I did notice this week, I think it was on Monday, and then it's just a little bit different because Monday there was a catalyst for NVIDIA to move versus everyone else because of the CES presentation. Excuse me. I think that, I've noticed that sometimes like AMD will rip to the downside, whereas NVIDIA kind of just hangs around a little bit, not really going anywhere. I've noticed sometimes that AMD rips to the upside and NVIDIA kind of, it's separate, right? Sometimes, some days it's attached, some days it's detached. I've noticed lately it's been detached. So I would just keep an eye on it. NVIDIA might just want to do its own thing this week, just like it did last week. But anyway, I love it. I love where it's at. Some of these lines are really distracting, especially on this black screen. Let me go ahead and I'm just going to lower this a little bit. That's cool. Actually, I have to lower all of this. There. And then get rid of that. Actually, I can get rid of that. Whatever, I'll deal with it after. So good risk reward in either direction. Take it at the break of day high. Set your target. If you're going to the upside, set it to set it to low of day, or even like halfway. Halfway gives you a really nice risk reward, depending on where your target is. And the same is true for low of day, right? Same is true for low of day. You can go ahead and set your target for high or halfway, depending on where your risk reward is. But I like it in both directions. Next one is jumping around to a different sector. JP Morgan. JP Morgan hit a new high this past week on earnings, right? That's all-time high. That's all-time high on JP Morgan. So it gapped up on its earnings on Friday and then climbed up and reached up and then forced down. Strong move to the downside back to the 20-day moving average. So I really want to see JP Morgan, and it did what we thought it would do. It went right through that kind of that box there. But I want to see JP Morgan. I'm going to just borrow this box. I want to see JP Morgan holding this level. You see all these green lines here. It's all the volume points of control. That's the biggest concentration of volume for each of those candlesticks. So what that looks like on a smaller time frame is most of the volume traded is sitting at this level, right? This level, this level, this level. So it's all kind of within the same area. So as long as we're on the proper side of it right now, we're not, right? We're on the underneath of it, right? And sitting at the 20-day moving average. So we need to hold that 20 and then break above this box in order for this to be bullish. I think that this is going to continue to the upside. I don't think there's anything in JP Morgan's, for them particularly that is going to be bad news, especially since it gapped up the way that it did. I do see that they reported negatively. I just don't think that investors in JP Morgan care. It seems, but we'll see. We'll see what happens. If it does break below this 20-day moving average and below the low of Thursday. We got that 166.45 is going to be the first target. I'm not going to go beyond that. I think that that's going to be a target for the week if we do break down. Now, if we do continue to work our way up, it might be small candles, small dojis that work our way up to try to make a new high. But we have to undo this whole candle, right? So just keep it in mind. I do like JP Morgan. I want to see what it does this week. The next one is Netflix. Netflix. The reason why I like Netflix, and have we filled that gap yet? Let's see. Not quite. 510. 510. Let me go ahead and actually set a level there. Set it right. Right there. All right. So we're almost done filling the gap. Price came and made a new high here on earnings and then kind of fell, went sideways a bunch. Next earnings gapped up again and then continued to work his way up. Now, as you can see, each earnings, it beat earnings per share, didn't beat revenue. Same thing, beat earnings per share, didn't beat revenue. And here we go, beat earnings and beat revenue, which is why it's making such a strong move. They have earnings coming next week on the 23rd. I see a nice cup and handle here. Let's go to the 2-day chart. I see a nice cup and handle here. Nice cup and handle here. New high, breakdown, higher low, higher high, continuation maybe, right? So that's what I'm looking at for Netflix. I do like the inside bar on Friday. As you know, it gives us a very clearly defined range to trade at. Break above the high and we can target break above the high and we could target that 503.41. Above that, we got 510.51. Break down and we got the 20-day moving average. Very, very simple. We do have a bunch of support here. Previous resistance can act as support. As you see, it's done on both of these days. Bunch of support on both of these days at this previous level. So if that continues to hold, then we work our way up. So that's what I'll be watching for this week for Netflix. Next one is TSM. Back to this sector. Now, this looks a lot different than... Oh, this is the wrong chart. TSM still looks very, very different than the rest of that sector, right? We're currently trading at 101.24. TSM has been up very, very high in the past, right? So being that it's here, it's kind of formed this broadening formation. I'm just going to stretch this out a little bit. Stretch that out a little bit. All right, there. And it tested the top of the range, came back, made a new high, came back, holding that middle part of that range for the most part, right? Holding that middle part. The middle part will be probably around $100, and it's at 101.24 right now. It's consolidated right on that 20-day moving average. It tried it on this day. It opened up above it, failed on this day, Thursday. Inside bar Friday, broke above the high, but still within the range. So I think that we have one more chance at that 20-day moving average before we fail. Now, they have earnings on the 18th, right, which is this week, which is in 3 days, on Friday. Is it Friday? No, Thursday. They have earnings on Thursday. I believe Thursday it doesn't say. I think it's at night. But anyway, I think it's at night. So we have pretty much all week to break this 20-day moving average. We have a nice gap above that candlestick there. And then below that, we have the 50-day moving average. Just something to watch. I didn't realize that they had earnings this week. I thought it was next week. I thought we had some time on it. But what I wanted the range break on that box. I'm not really very keen on playing earnings. But if you're interested, then I would let it get out of the box first, to be honest with you. And then maybe if you're interested in doing the earnings play, then go ahead and just watch the open interest. Right? If you're on Thinkorswim, you can see the open interest and the volume on the chains. Well, you can see that on everything, but open interest and volume on chains. And then on TOS, you scroll. If you're on the options, the trade tab, and you go all the way down, when you click on the ticker, you go all the way down and it shows you the largest orders for the day. It's basically like a flow algo or like what's the other thing? Black box or whatever. How they show you or trade ticks, how it shows you all the large plays that people are making, the large bets. TOS also shows you that, so you can just go there and see, who has a larger bet, is it calls or puts, and then just go and just look through and see, how people feel about it, how far out they're playing, how far out in terms of strike and in terms of time they're playing. If you want to take a bet, just side with the one that gives you the better risk reward. I I bet they don't have a crazy expected move, especially since they haven't really been super volatile. I mean, you got this day, which was very volatile. You have this day, which was very volatile. And you had this day, which was very volatile. But you don't get a lot of crazy volatility with TSM like that. Probably get like $2, $3 moves, nothing crazy. Right? But with this, it might give you like a $6 expected move. So it might be worth it. So I'd watch TSM for this week. Let's look at, before we look at DKS, let's look at IWM. IWM, I don't think I have one line on this chart, which is wild because Spiderboy plays this religiously every day. And that's how you get really good at this stuff, is just by like looking at the same chart every day and just like getting to know it, right? So a bunch of resistance here, ripped through 2020, came back. We've traded on the upside of this level here for a bunch. We formed the spring here where it broke down, made a new low, and then ripped. Now, looking at this, I mean, the first thing that stands out is you got the higher lows, right? You got all these high lows. Even like on this first pullback, what I would consider a pullback right here, small pullback, versus just sideways, right? Because these are just sideways. Then you got the first pullback, it's still forming a higher low, right? And then you got the highs are getting higher, so it's still well within that uptrend. Let me go ahead and see if I can draw a clear channel for this. And that's obviously a very biased channel, but so it is still in the uptrend. It looks like it came down to fill this gap and trade right alongside of it. All this little gap right here, just kind of trade alongside that between the high of this volume point of control and the low of this volume point of control, and just went sideways along there for a bunch. Now, it tried to break down on Thursday, but on Friday, it opened up higher than even Thursday's high, right? It opened up way up here. So that shows me that there's some strength there. I think that IWM has a lot of JP Morgan in it. IWM is like one of those. It's the Russell 2000. Russell 2000. So it's comprised of, everything. It's like another S&P. There's a bunch in there. So JPM seems like it's very, and banks or whatever seems like they're very highly weighted because it's put in a big red day just like it did on JPM. So as long as it holds, and then just let me zoom in on it real quick. It's holding. Now that's why I like these volume points of control, because they give you a lot of perspective. And let me show you what it looks like real quick. Let's see if I can find it. I'm gonna have to do it this way. Hang on a second. There. There. All right. So you see volume profiles. I have them on. It's basically a volume profile for each day. And on this day, for the 15-minute, that's what I thought. So on this day, all the volume showed up towards the middle of the day, right? Not at the beginning, but towards the middle of the day. And price kind of held at this area. What I like about that is price held at this area when it had a good chance to retest the previous day's low. Right, here's your previous day's low. Price held up a little bit higher. So that's a show of strength, potentially, right? Depending on what was going on in the market. Now, again, I think that some of these names are heavily weighted in IWM, and I'll be curious to know what their top 5 and top 10 are, but I bet you JP Morgan is up there. So as long as this JP Morgan move is digested, as long as some of these energy, I don't think energy had a great day on Friday. As long as energy is digested, I think that there's a potential for this to work its way back up. As long as it holds this level, it needs to hold this level. It needs to hold, and at the very worst case, it needs to hold this line right here, 192.13. It could do whatever, but as long as it holds that 192.13 around here, work its way back up, get to that 20-day moving average, right? I wouldn't take a trade on it personally because I don't know it quite yet, but I think that if it breaks above high of day, at 20 is fair game. Above 20, we got that previous magnet right there at $200.35. Now, 200 seems like it would be a magnetic number for IWM, and so I would just be interested in seeing it kind of trading above that level. I'm gonna go ahead and set my alert for the high of day. Let it break above high of day. hit my alert. From there, we can see what it does with the 20-day moving average. It kind of failed it on Monday. It tried it and then kind of fell down a little bit. Let's see, SMCI, which we spoke about earlier, ELF, CYTK, SSD. Oh, look, there's no JP Morgan. That's interesting. Yeah, I mean, look at that. The weight on their number one symbol is 0.64%. Right, so it's just like when you got a good market day, then you can kind of rip this thing to the upside. IWM is tough to play in regards to looking at other things. Like I know, like SPX will have a certain look to it. Usually QQQ is the one that's a little bit stronger. SPX and QQQ kind of go side by side, and then IWM doesn't necessarily move immediately. It kind of takes its time, and the reason why is because it has 2,000 tickers to move at the same time, right? And some of these names like CYTK, QLYS, IMGN, right? Even SMCI, like a very large cap name that doesn't get traded like that. So, at least in our room, right, doesn't really get traded like that. And I never see it on the market, so on Twitter rather. So interesting. Let's look at the weekly on this real quick. Now, what I like about where it's currently at is it's been at this. This is like kind of the peak of its area, right? You see, there's kind of a channel here. Here's your lows. Let me just draw it out. Easy if I draw this. Right there. That's clean enough. So at this channel has been just up and down within this channel. It's rejected. It broke above the channel and kind of rejected below. Now, the good part is that it's just at the top of its channel. And then we put in a red week, but it's not like a red week that broke hard and came back down. Just kind of red week, a little bit of indecision. We're not sure exactly where we're going to go. So as long as IWM stays above on the top side of this channel, I mean, you see like it kind of broke out above, came back and made it higher low, and I was kind of hanging out just at the top of the channel. So that's very, very strong. We got to get above high of day, get above that 20-day moving average for me to go bullish. Now, break down below that level, 192.13. From there, we can target that 50-day moving average sitting at 186.22 and change. So that's what we're watching. If 191.87 holds, definitely bullish. Yep. 191.87 is Spider's number. So I'm going to go ahead and add it to my chart. 191.87. Let me just go ahead and edit that. 191.87. And this is how I first started. When I first started trading, I remember just like, I remember just putting other people's numbers on my chart to know, to look at what they're looking at. It gives you the extra confluence. Let's do bottom left. It gives you the extra confluence, that extra little bit of confidence. Yellow, there you go. And then you kind of like from there you start seeing what they see and you start forming your own level. So 191.87 is the Spider Boy number, so I'll keep that there. Actually, I'm going to go ahead and set an alert there too, just in case. 191. 292. There. All right, cool. The next one is DKS. Now, DKS looks very similar to IWM chart. I bet you DKS is held by IWM, but the reason why I like it is just because we fell hard on earnings, and then we kind of came back and refilled that gap. There's a potential that played out well. There's a potential head and shoulders here. We got the shoulder, head, another potential shoulder sitting in this area here. Maybe break down and test that 50-day moving average. But if we do hold this area as support, then I think that we go higher. This area here. If that target breaks down, so let's see, IWM target 189.90. Sorry, jump back, but 189.90 will be the breakdown target. 189.90 and 187.35 are going to be your targets if that Spider Boy number breaks down at 190, 187. Right. Nice. So basically, we're going to undo this candlestick here. Right. If we can't hold the support where the volume point of control for that candlestick is, we're going to come back and retest the rest of that candle back into this previous resistance level, which I'm sure will hold. Right. So that's a good play. Either way, it's a good play in either direction. DKS. So DKS, we got a potential double bottom. We also got a potential inverse head and shoulder. So that's just something interesting to watch. I think that break above day high, we can target that 20. Above 20, we target the previous high of this candlestick at 144.56. Then above that, we got the high of this box, which is at 147.25 ish. I wouldn't expect much more after that. Let me pull this back. I wouldn't expect much more after that, right? It's either going to be 1, 2, 3, 4, which is a hell of a move. Or we break down below low of day. We got a nice previous low to target there. And then we got the midway point of this candlestick right here. And then we got the 50, depending on where the market wants to go. I got to do something with all these lines. These lines are driving me nuts. But anyway, you see what's going on. We got the highs here. Good risk reward to the upside. Break of day high. Say your stop to the open or whatever. And then we could just target this level here. Give yourself a week to trade. As price moves up, so does your stop. And your risk reward gets much more favorable, right? And then this one has a pretty even risk reward in both directions, just by eyeballing it, right? We have the same distance from here to here as from here to here for the most part. So nice clean trades upside and downside. Coinbase, it looks like, it absolutely went on an absolute tear. Let's look at the weekly on this real quick. After doing a bunch of nothing, it went on an absolute rampage. And now it is just breakdown, bear flag, continuation into that 50-day moving average. Price is below its volume of control here, point of control. And so break down below the 50-day. My first target would be this point of control here, where there's a bunch of buyers sitting right here in this area. If we do break below that level, the next level to target will be that 118.40. Underneath that, I will put it right around like right around here. Whatever, just like maybe I'll raise it up a little bit. Actually, let's just call it 112. How did I get my 112? I measured between 124 and 118. And then I got 6, so I just deleted 6 from 118. And that's how this market works, surprisingly, right? And then also, I think that by the time we get there, the 100-day moving average will be much closer to that 118 or 112 rather. So I think that's going to hold that support for Coinbase. Now, if we for some reason break above and go to the upside, you see there's a bunch of traffic sitting in this area, bunch of traffic. If we can get above the high of day, then the first target would be just right around here at 147. And then above that, obviously, we have 150, which would be a very clear target. 150, and then from there we can come back and target the high of day on this candlestick. So I'll be watching Coinbase. I think that Coinbase is in a strange place because we have like the crypto Bitcoin ETF and all this stuff, all this news that's going on surrounding that, with the SEC's decision that's been they've been like on the brink of it for the past like 2 weeks. But I think that and I don't think it's affected them in the best way, but it is what it is. I think Coinbase is poised to continue to move to the upside at some point, but maybe not now. Good risk reward to the downside. Not the best of the upside right now, but it is what it is. Next one is Uber. Uber, is this all-time high? Yeah. All-time high. The high here was 64.05. And we rejected 64.05 on Friday. However, let me just change. We rejected that 64.05 on Friday. Forming green days when the rest of the market is red. So that's great. Ever since their earnings report, they've just been ripping, and they have earnings coming up in a couple of weeks. So there's a potential for a continuation move and a run up. But Uber is just showing absolute strength. Good consolidation, breakdown. Good consolidation, rip, right? And we've been playing it all week long. So, shout out to anybody that took Uber this week. Above 64.05, which is going to be, I'll just be watching it above 64.05. I want to see it trading and holding that level because it didn't do a good job at holding that level at all, right? Let's go to the 15-minute. It opened up and it ripped, and then it kind of went sideways a bunch and then slowly came down, just like the rest of the market. So I want to see it get back above that level, 64.05, and then just consolidate, come back, retest it, test once, test twice, and then work its way up for Uber. So that's what I'll be watching. Otherwise, if we do have a nice red day in Uber, we can have a nice potential red week with a. Let me just, let me just do this. Let's do this. Get rid of some of these levels. Now, as you can see, I'm just gonna hide them. I don't like to delete them entirely because they might come into play in the future if Uber revisits some of those levels. Is gonna come back into play, right? But I do like the fact that target each of these lows right back into that 50-day moving average, right? If we get that pivot, we might not get it. But if we do get it, 50 days of target. $57 call or $57 put. Above the high of day, 65.16, we got 70. 70 is going to be the target, right? 70 is going to be the target. No need to overthink it. $70 for Uber. Next one is, let's just take a peek at Lyft real quick. Yeah, Lyft is not in good shape, and it's like $13. I don't really like trading things at $13, so I'm just gonna leave it as. But Lyft is not looking like Uber does right now. Costco, I believe, is at all-time high. All right, yep, this is an all-time high. Now Costco is, again, we had that multi-year wedge. That wedge that started forming way back here in 2021, and it went sideways a bunch until it finally broke out. Good sideways action. Nice strong rip. Costco went from 605 to 680 in like just weeks. So very, very strong move. Strong move up, came back, a little bear flag down into the 20. Now we're right back into to make a brand new all-time high on Friday. Right. So I think that there's a lot of strength here. I think the ultimate target for this, if it gets above that 683.32, which is 8 cents away, then the next target will be 700. 700 is a very, very clear target in my mind for Costco. I wouldn't put anything more than 700 on the chopping block for this week for Costco. Call it 7. Let's just call it 7. Let me actually just edit it. 700. 700 for this week. As long as that 683.32 holds, right? So we got to get above this level, come back, retest it, and then work our way to 700. And then obviously above 700, we got some levels up here, but I won't talk about those future levels. I think is there one more? Oh, no, there's not one more. Okay, nice. So Costco putting in work. If we do fail, we can play low of day between Friday and Thursday back to the 20-day moving average, and keep it simple, right? You don't got to go beyond that. Next one is DocuSign. Now DocuSign is, I wouldn't have touched it when it was back here at $40. But definitely interested in it now, especially with this nice strong move to the upside. Good flag breakdown, and then buyers stepped right back in and brought it right back up. So a little bit of buying fatigue that occurred here, but they brought it right back up. And it almost looks like an inverse head and shoulders. It looks like, to me, it looks more like a cup and handle, kind of, right? But it doesn't matter. The point is price came down and went back up. That's the point. That's the point of all these cutesy little names that we give to these patterns. It just shows that either price goes up and goes back down, or price goes down and goes back up. In this case, price went down, came back up. So DocuSign above 63.93 is going to be the best, or you could just call it 64. Above 64, you got 66.90. Above that, you got 69.50. 69.50. So I'll be interested to see what it does above that 63.93 this week. 63.93. I'll just go to 64. I want 64. Above 64, hold it. All right, rip it up to 66. Above that, 70. We'll see. We'll see what happens with DocuSign. I don't like it to the downside only because, yes, we can undo the low of day here and then undo the low of day here and then kind of trade down here. There's a bunch of support, I think, in this area, and I wouldn't want to test it. I just wouldn't want to test it right now. But if you like it and it gives you good opportunity, why not? Next one is AMD. Now, AMD doesn't look exactly like NVIDIA, but it kind of looks like NVIDIA, right? Kind of looks like NVIDIA. Now AMD is very, very close to its all-time high here as well. AMD's been kind of a sleeper. I mean, I know we've been making money on it, but it hasn't really been making a lot of noise in the world of tech. It and Lisa Su's always great for pump, and uh, and everyone knows who AMD is. AMD is very, very well known. They just haven't. I just feel like they've just been quietly building and quietly working their way up. Stock price as well as the technology. They have earnings coming up in 2 weeks, the 30th, which is exactly 2 weeks from today, or from tomorrow rather. So what I like about AMD, strong move up, nice pullback into the 20-day, rip up, little sell off, inside bar, right? So inside bar is good for indecision, especially when you're putting in red candles and you're indecisive whether you want to go down. That means you probably want to go up. So as long as we hold that 147-ish, right, get into 147, from there we can work our way up. Nice little potential pivot machine gun between these three candlesticks here, even though it's not quite the definition of a pivot machine gun, but whatever. Rip through the highs as possible into 150. Above 150, we got 155. Above 155, we got 160. Obviously, we got some of these key levels in between, but the 155 and the 160 are the ones that you really want to watch. Break below low of day Friday, we got Thursday's low of day, we got the 20-day. I don't think we go below the 20-day only because there's a bunch of resistance here that can potentially flip as support, but it might. Who knows? Who knows? So AMD is also on my list this week. Next one is CCJ. CCJ, congrats to anybody who took that 50 call with me. There's 2 more months left on that trade. So 2 more months actually to the day. So we got in over here. I forgot when we got in actually. Let me look. It wasn't that many days ago. Let's see. CCJ. Come on. CCJ. It was January 9th, which was, yeah, on this day. I think it was at the end of the day. It was at the end of the day that we got into it. So nice little 3-day hold for a 3-month or 2-month play. Strong rip, hit the target right away. I don't know what the catalyst for the move was. I saw that they got a price target raise on Friday. Uranium prices jumped to 16-year high on supply. Also, supply chain got choked out. Okay, cool. That works out. So I saw the strong move here. I saw the previous resistance get broken. All this previous resistance. I'm like, oh, you know what? I like CCJ. And it was at like 1 o'clock in the afternoon that we called it. And yeah, I mean, it continued to rip. CCJ, I believe, is sitting at, yeah, this is all-time high for CCJ. Oh, no, it's not. It's not. Good thing I scrolled out. All right, so we're at the previous highs. I think like pre-split highs. These are pre-split levels. What do I have? 52.37, which is weird how it almost lines up with that fib level that I have there at 52.48. And then there's a small pivot right here. Then we got the big boy at 56. So, I mean, listen, this thing has been on an absolute tear. Look at this angle, higher highs and higher lows, right? Here's your higher highs. There's your higher lows right here. Boom, boom. Over here, up here. So above 50, as long as we hold that $50 mark. So 50 is really the main attraction. Now, people ask me about CCJ and whether we're going to hold it or not. And I said, you can do a couple of things. You can either sell or you can hold. You sell and you take the profit off the table. I think we took the contracts from $1.42 on Tuesday to $4.25. I mean, that's good enough to sell, right? Get out of the trade, wait, see if maybe the reason why is because I think it's going to come back and try to retest some of this level. It has all this previous resistance sitting here that it can retest. It has this nice little gap right here that it can fill. It has this previous fib here that it can fill, or that it can come and back test. So, this is a 2-month hold, but there's no need to be in pain, right? So why not just be green the entire time, right? So let's just see. I've held, even though there's plenty of time, and I've lost. So let's see. We'll revisit this tomorrow. I believe we're probably going to form an inside bar on this tomorrow and the next day. And then we'll just take it from there. We'll see what's favorable, right? We'll look for another nice strong entry like this. Now, I do like that it's above all this previous resistance. If we put a 2-day on this, what's happening? Oh, not even a 2-day. Oh, that's why. 3-day. We put a 3-day on this, and we got a strong bar. Actually, just put the weekly on it. Here's your pivot machine gun. We got the lows or the highs are getting lower, and then we rip through all the highs in one shot. Right. That's what I'm looking at for DocuSign. Right. Is same thing, kind of, or rather, it can go to the downside, but. Whatever other one it was, rewind this 5 minutes and you'll find it. My attention span is the same as a flea nowadays with the market, especially. But I'll be watching it at this range. I want to see what it does, see if it holds, even if it pulls back a little bit, and I want to see some buyers step in at 47 to see what's up with CCJ. So next one is D-Dog, DDOG. I like playing this every once in a while. It doesn't make the watch list every week, but it's been making it quite a bit. Above high of day, we got that target at 124.69. Let's go into the weekly on this. Let's see. Yeah, we're working our way up into these pivots here. Right, I'll just put those 3 for now. I don't think that we'll do most of them, but maybe we'll touch the second one. Above 123, we got 124.69. That's what I'm aiming for this week. 124.69. Give me a nice strong weekly candle. They got earnings coming up at the end of February, so we got some time. Double bottom on this level here. Gave up the 20-day and then went right back into it and found support in it 3 days in a row, with the price slowly curling up. So I think that DocuSign or D-Dog is going to work its way to rip through this level here and target that $130 mark, or that $124, what is it, 130.70. Right, above 124.69, 130.70. I think that 130 is going to be in the future of Datadog for certain. Next one, Shopify. Shopify broke out above the wedge, strong move up, ripping through all the levels, came back and retested this previous high, this pivot here, retested it a bunch as support. Here, bounce, came back, found support in it once more, and now making new highs for the year. Shopify has way higher highs, right up here at 170 something. Let's do the weekly. Now, this is clean, just clean moves to the upside. I think Jake, if you look into our top setups room, I think Jake spoke about Shopify for the past couple of weeks. And so he might have a really, really strong thesis on this. I just think that its holding trend is filled, hasn't come back to fill that gap. It's holding the VWAP from this pivot, which we broke out and retested a bunch. And I think that 85 and 90 are very, very clear targets for this. And that's it. It's very simple. Especially with retesting that previous pivot twice and bouncing that with the way that it is, making you high. Now, if we do fail, I see that there's a bunch of sell pressure sitting up here, right? Because you see all this upper shadows. If we do fail, then we got some nice clear targets to the downside. Based on the strength of this bounce, I would target the entire move back to the 50-day moving average. However, I don't think that's going to happen. I think that we might find some support. Right now it looks like buyers versus sellers, especially look at Thursday's candle. It looks like buyers versus sellers. We got all the buyers stepping in at previous support or previous resistance here. Buyers are stepping in, and we got some sellers from this, from way back here. All these sellers here in this gap. People that didn't get a chance to sell up here. People that didn't get a chance to sell in these candlesticks here. That's where we're at right now. So if we can fill all those orders and then buyers continue to buy, work our way up, 85 and then 90. Otherwise, we got the nice pivot machine gun to the downside, back to the 50-day moving average. Let me go ahead and set another entry there at the. So you can take these as, depending on where you enter, right? Enter, exit. Enter, exit. Oh, you missed these two entries. All right, take this one. Entry, exit, right? Entry, exit. However you want to play it. Or you could just play 5 contracts. Boom, enter. Sell one. Sell another one. Sell another one. Sell the last 2, right? However you want to play it. That's how I use these targets. Walmart. Walmart is currently at $161 inside this gap. very well inside this gap. Retested the high, found some sellers, came back, bounced above it. Got an inside bar here. So inside bar, inside of a gap with a bunch of buying pressure. The doji, the wick on the bottom looks bigger and stronger than the wick on the top. And then the volume point of control is underneath most of the price action. And we're above the 100-day moving average. We're above all the moving averages. Now they're in a strange order, right? The 20-day is at the down here next to the 200, and underneath the 50, and the 50 is underneath the 100. So it's like kind of in a weird order. But if this starts to get some legs, this 20 is going to rip right through all of these in a few days. I do like it to the upside, especially with coming back to kind of retest where all these sellers were here and finding some support and bouncing up and forming that kind of flag in there. Right? If we do the 4-hour, it's a beautiful flag, right? Strong move to the upside, and then just a nice little, flagpole with a nice strong flag here. Price is getting tight, can work either way, but you see, move down, sitting on top of volume point of control, move up. Move down, sitting on top of volume point of control, move up. This up move is higher than this up move, so I think that we're working our way up little by little. The first target for this would be above Thursday's high at 161.89. The first target would be 163.74-ish. And then above that, obviously, we got that 165, which has a lot of attention. If you look at pretty much all the chains, all the expirations have a lot on 165, a lot of volume and open interest on 165. So I would just keep those in play. Let's look at IBM. IBM at top of consolidation range off of uptrend. So yeah, same thing as what we discussed earlier. There's a range here where price kind of just like, oh, okay, I found the new high, bet. Let me go retrace and find the low and see if I can, break down. Now I'm gonna go ahead and set it here, and I'm gonna extend this back. Price, and then this is not the first time the IBM has been here, right? I think the IBM has traded back here in the past. Yeah, okay. So not the first time it's been here. However, it's worked its way up, came back, bounced, found some support here. Higher, this low is a higher low from all these previous lows, right? Higher low, boom, made a new higher high, came back, retested the low, found support on wherever level this is, as well as the 20-day, came back, retested this level, formed kind of a spring because it broke down, but then it gapped, right? And that usually happens. It came down like it's like jumping on a trampoline. If you're just jumping without putting too much pressure, then you kind of just land, you don't make a new high, you kind of just land in the same spot. But if you come back and you pull your force, you bounce strong. Thus the spring. So and then Terry says it's consolidating, it's in a range of consolidating towards the upside. So here's your consolidation inside of your range, and this just at the top. Now, off that bounce, based on what I see off this bounce, we might find a little bit of resistance in this level, pull back, and then on that pullback is where it's going to really determine what's going to happen. It might pull back just slightly, right? Pull back just slightly, and then find support, and then try to take out that high. Is what this looks like. The reason why I say that is because this was just a very strong accelerated move, right? I mean, we had this strong move up, consolidation, move up, consolidation, move up, and then move up. It just seems to these last three candlesticks seem very aggressive. I think it's going to just pull back a little bit slightly and then give us a better entry at the low of this candlestick, not the low of day, but the low of the candlestick there. And that would be like really the ideal entry if we see buyers step in, and then from there work our way into maybe 170 calls or something. But IBM is very interesting. They have earnings coming up on the 24th. So very, very interesting. I think it's a good play. Let me just look. Again, the daily looks very, very nice. Strong candlestick. Ripped above the 20-day moving average. Maybe an inside bar coming tomorrow. Maybe not. And then just in greater context, you got higher highs, higher lows, strong move, still higher highs and higher lows, still within the trend. Good consolidation for 4 weeks, 5 weeks. And now it looks like it's time for it to rip. So I'm going to go ahead and thank you for this play, Terry. I'm going to go ahead and set the alert here to see what's up. See what's up with IBM. Next one is Disney. I got 5 more. Disney. Looking at those on the weekly, I'm like, ugh. But I do like the daily on it. I do like the daily on it. Am I in love with it? No, but I do like it, and I want to mention pivot here. Color this pivot yellow. All right, so kind of a falling wedge. What was it about Disney? Like, it's not looking that special to me right now. But let me look at it on my phone. Give me a second, because looking at it on this chart and looking at it on my phone, it's giving me two different looks. Let's see. Oh, I know what it was. This 50-day, it broke the 50-day and it's coming back to retest a little bit of sell pressure here. So I'm thinking it's going to break down below that 50-day, give us a nice little breakdown move to the downside into this 100-day. That's what I was planning. Break down below low of day, come back and test the previous low of day, fail that, and come back and fill this gap here into this 100-day. Well, actually, it's going to get into the top of the gap and then maybe fill the gap. I don't think we fill the gap, but maybe try to come back to 84.93. But the 50-day, the reason why I like it is because it consolidated here, gave up the 50-day, came back, retested it, and it might fall down. Really, really good risk reward to the downside on this. Below low of day, set your stop. You can set your stop right at the 50-day, and you can set your target. Set your target to the 100-day. Give yourself a nice 2.35 to 1 risk reward. I like to play 3 to 1, so I probably won't call Disney unless it's putting in a crazy day. But they do have earnings coming up in a couple of weeks, so there's a potential for a big move there as well. Not my favorite in this list, but I did want to mention it. It did look very specific way on my cell phone screen. All right, what was this? Dropbox. Dropbox has been up here before. We're back at these previous pivots, right? We're back at this pivot here. Price is at 31.40, was at 31.57, which is 10 cents above the previous pivot. So that's very interesting. I think we can get to 33 pretty quickly. So 33 calls for the next couple of weeks, maybe 2 weeks out or something like that. 33 call. And then, I don't think it's going to get up here to meme levels again, but who knows? But the most important thing is that price is right back to pretty much where I IPO'd at. I think it opened. Let's look at where it opened. Let's see. Over here opened up at 29, reached a high at 31, and the high for that time period was 34.83, and then the high after that was 41.79. Kind of when it started memeing a little bit. But anyway, it's right back to that level. So 31-ish, right? 33, 35, 31, 33, 35. Those are going to be the levels for this week. For this next couple of weeks for Dropbox. 31, 33, 35. For Dropbox. I like it to the upside. You can play to the downside. It gives you a nice little potential pivot machine gun there. Rip the lows 1, 2, 3, 50, or take out the high and then pivot, right? Whatever your flavor is. Meta is currently sitting at an annual high. Is completely filled the gap, and now we're targeting. We're above this pivot. We're above that pivot, right? We got a little small pivot there where we're currently trading at, and then we got the high of that move, 384.33. Which is all-time high for a Meta. So very interesting. So we're very, very close to all-time high. I guarantee we'll probably rip above this level, and we'll probably consolidate. Maybe we'll rip straight to that all-time high and then kind of pull back and consolidate within this level. So I'll be watching it just because I want to know what it's doing here at all-time high. 390s and 400s are probably going to be very interesting for the next couple of weeks. I bet you the 400 from March is stacked. So I would just look into the 400 call for March 15th expiration. Just see what it looks like for yourself if you're interested. Otherwise, you could wait for it to pull up to this level and then pull back after the reaching all-time high. Now, the other thing is, what if they say, we blew everything out the water. We're starting to make money out of our metaverse project. Then it could really go insane, right? But I don't think that's going to happen personally. But there's a potential. We're too close for comfort. There's a potential for catalyst coming up in earnings in a week or 2 weeks rather, February 1st. So play it how you want. In line with Meta, let's just look at Google real quick. I don't have it on my list for this week, but we'll be looking at it for sure. The reason why I don't have it is because I really should have it. It's above this box, and it formed an inside bar, clean inside bar with nice strong volatility. Move to the upside, downside. I like the fact that it put in this strong candle to the upside, came back and put in a strong, nice low the same day, and the next day we just traded all pretty much within the range of this one candlestick here. So Google, as long as it continues to hold trend, thing rip to the upside. We got 145 on deck, and then above that we got potentially 150 if we could rip through that 145.22 high. And then if we want to target some previous levels, we got this level here, 148.35, 150, 155 for Google. I like it better to the upside because especially since the 20 days right here. I mean, we could play from here down to here, down to here, but I think it makes more sense to let it even come down, make a new kind of low here, and then work its way up. Personally, but I'm not the one that tells the market where to go. I only follow it in which direction it goes. Next one, and then I have one more, is MRK. MRK is currently at all-time high-ish, just about at all-time high. Let me go ahead and mark. So we made a new high on Tuesday. Usually at this level, it fails and sells off, but it has not. We formed an inside bar on Friday. You see a bunch of sellers, a bunch of buyers are sitting here because look at how long this tail is on this Thursday price action. A nice long tail. Came back and retested some of these points of control here. Bounced. So above a high of day, we got 118.67. Above that, we got 119.65. And then above that, we got the high of the week, 119.94, which we could just basically call 120. 120 calls for this week for MRK. Now, if for whatever reason this, and the reason why I don't really like playing this sector too much is because it's very volatile. You be in some nice calls, you be up 40, 50%, 30%, whatever the case is. You hold overnight, and then at 3 o'clock in the morning, you get some terrible news, and then you end up with a candlestick that opens up down here. So just be aware of that, right? I usually don't like playing these tickers because of that, but if you do want downside, you got low of day, low of day. Either one could be your entry. The first one's the best entry. Second one's the safest entry. Third one's probably where you should be exiting, unless it's going to pull one of these. Now, I don't think it's going to do that strong accelerated move to the downside to undo this candlestick. I do not think it's going to do that, but I'm going to go ahead and leave it on the chart because anything can happen in this market. I'm going to go ahead and leave a level right there. Just, you know what? And this was serendipitous at that in the middle of that. So I'm going to leave that one too at 111. So you got some levels to the upside. I like it better to the upside, but I'm not going to lie when I tell you it has really good risk reward to the downside as well. So downside actually has better risk reward because you have predetermined levels that have recently hit, and if we don't break out above it right away, we're going back down. Last one is Marvell. Marvell was putting in some strong moves towards the end of last week. I haven't looked at Marvell in quite some time, and I think it's time to look at it again. Reason being, we hit the bottom of the broadening. We came and made all these new lows, and now we're bouncing and we made our first new high over here. Potential inverse head and shoulders. You got the one shoulder here, head here, one shoulder here. Came back, bounce on another kind of shoulder here. A two-shouldered or three-shouldered individual. Most importantly, we got an established uptrend with the lows getting higher and the highs getting higher. So I want to see what it does. I want to see if it kind of holds this area here. That's going to be my level to hold. We got two volume profiles right next to each other sitting at 65.87. Marvell, as you know, is semiconductors. And so if SMCI, AVGO, NVIDIA, AMD, TSM, if all of those are moving up, then it's very likely that Marvell is going to move up as well. So 69.52 would be a level, and then I'll call it 72 above that. $72. 72. Good risk reward to the downside, though. I'm not going to hold you. Below low of day, say your stop to high of day, target the 20 day. You got 2 point something, 2.79 to 1 risk reward ratio. So not bad, not terrible, right? But that'll be one to watch for this week. It's been making very, very strong moves. Look at the 2 day. 2 days is very, very strong. Look at the weekly. Weekly's, for some perspective, we got that nice slow decline, strong move up, came back and kind of refilled that gap, and now it's continuing the uptrend. So very, very interesting move. Let me get rid of this before I wake up with a thesis with a bias tomorrow. All right, guys, that's it. Thank you so much for being on this call. Took a little bit longer than I expected, but always happy to oblige. We'll see you tomorrow. Hopefully, we have a nice moves up or down. I don't care as long as it moves, right? I don't like the chop. And thank you for being part of the session with me. And I will see you on the next one. And I'll see you guys tomorrow. Peace.